Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. Broadly, stock market players can be classified as speculators and investors. Speculators put money for the short term, and this category includes day traders who frequently buy or sell stocks and aim to square off their positions intraday. Speculators try to profit from news-based stock price movements and short-term price signals based on the technical indicators. Investors, however, are generally long-term players who buy stocks based on companies' fundamentals and hold them for longer periods. Activity of speculators and investors help determine speculative and non-speculative stocks. Now, average percentage delivery quantity is the metric generally used to differentiate between speculative and non-speculative stocks. It shows the number of investors who are willing to accept the stocks in their demat account, and if the total traded quantity of a stock is 500 and the deliverable quantity is 300, it means that 200 shares were intraday. The delivery percentage quantity in this case will be 60%. Stocks with higher delivery percentage quantity are considered non-speculative, and those with low delivery percentage are considered speculative stocks. This metric, when combined with the stock price, provides an idea of the short-term stock price movement. In this video, we'll be talking about 5 fundamentally strong non-speculative stocks which are worth investing in. Now friends, if you have not already become a member on our channel, please click on the join button and follow the steps to do so. This will entitle you to member-only privileges on Profit and Equities. This includes being added to our member-only WhatsApp group where we discuss stocks, have individual portfolio discussions, etc. Also friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Also friends, this is not our own research. We'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Please watch this video to know more about these stocks. Now the first company on the list is Bharat Engineering Limited, which is available at Rs 514.35 and the face value for it is 1. The symbol for it is VARROC. Now Varroc Engineering Limited is an India-based company focused on designing, manufacturing and supplying exterior lighting systems, plastic and polymer components, and electrical and electronics components. It also supplies precision metallic components to passenger cars, commercial vehicles, two-wheelers, three-wheelers and off-highway vehicles. The company's segments include polymer, electrical, engine valve, forged components and lighting. Analysts believe that this stock is well positioned to command premium valuations. Its global market share is growing, R&D facilities are robust, share of LEDs in global auto lighting is rising, and expansion of Brazil, Morocco and Poland plants have happened earlier than was planned. The company is also aiming to increase its presence in the Japanese and Korean OEM markets. Now, as is evident from the one-year chart, this company has been on a consistent downtrend and a lot of wealth has been eroded here. The market cap of the company is 6,934.03 crores, which means that this company is a mid-cap one. The EPS of 33.38 translates into a price to earnings ratio of 15.41, which is dirt cheap when compared with the industry PE of 31.95. The book value of 230.78 also translates into a reasonable price to book ratio of 2.23. The debt to equity for the company is slightly high at 0.9072, whereas the return on equity for this company stands at 0.1515. The dividend yield here is 0.78%, whereas the promoter holding is a very strong number and stands at 85%. Also, none of the promoters holding is pledged. Total debt on the books of the company is 2,800.6 crores, whereas its 52-week high and low stands at 1,178.70 and 475.20 respectively. Now the second stock on the list is Gujarat Gas Limited, which is available at Rs 183.90 and the face value for it is 2. The symbol for it is GUJGAS Ltd. Now Gujarat Gas Limited, formerly GSPC Distribution Networks Limited, is engaged in the natural gas business in Gujarat. The company supplies piped natural gas for domestic usage to over 1,80,000 in total to the state of Gujarat. The company supplies PNG to over 11,900 commercial and non-commercial premises across the state of Gujarat. It supplies PNG to approximately 2,835 industrial customers in Gujarat, covering all the industrial zones across the state. Now, this distributor of natural gas in the industrial, commercial, domestic and automobile segments has a significant share in the city gas distribution market according to a report by Deutsche Bank. The ramp up in new areas of Jamnagar, Bhavnagar, Kutch, Botad, Dahej, Thane, and Silvassa will support the company's long-term volume growth. The brokerage expects that the rising CNG penetration and an industrial revival will ensure a 9% volume CAGR, 19% EBITDA CAGR, and 40% EPS CAGR between 2017-18 and 2019-20. Now looking at the 1-year chart, this company was on a slow downtrend for the first few months of the year, but since then has resumed a steady uptrend. Over the last few days, there has been a huge spike in the price of the stock. The market cap of the company is 12,659.49 crores, which means that this company is also a mid-cap one. The EPS of 6.06 translates into a price to earnings ratio of 30.35, which is much more expensive when compared with the industry price to earnings ratio of 22.41. The book value of 32.04 also translates into an expensive price to book ratio of 5.74. The debt to equity for this company is also high at 2.0149, whereas the return on equity for this company is 0.1278. The dividend yield here is 0.54%, whereas the promoter holding for this company is a strong number and stands at 60.89%. Also, none of the promoters holding is pledged. The company has a total debt of 3069.2 crores on its books, whereas its 52-week high and low stands at 192 and 115 respectively. The stock on a whole has 20 buy recommendations, 5 hold recommendations, and 2 sell recommendations. The third stock on the list is Dalmia Bharat Limited, which is available at Rs 1181.70 and the face value for it is 2. The symbol for it is DALBHARAT. Now, Dalmia Bharat Limited, formerly Odisha Cement Limited, is an India-based cement manufacturing company. The company's segments include cement, refractory, and others. The company's products include Portland Slag Cement, Portland Pozzolana Cement, and Portland Composite Cement. The company's brands include Dalmia DSP, the well-established Dalmia Cement, Dalmia Ultra, Dalmia Infra Green Cement, and Konark brands. Now, this cement manufacturer, with plants in Tamil Nadu and Andhra Pradesh, has a capacity of 9 million tons per annum. Anand Rathi is optimistic about Dalmia's prospects due to its increasing share of premium products and improved capacity expansion. In addition, the amalgamation with Odisha Cement will result in tax savings because of higher depreciation and a simplified corporate structure. Now, looking at the 1-year chart, this company has not really had a definite pattern and has been choppy throughout the entire year. The market cap of the company is 22,801.91 crores, which means that this company is a borderline stock between a large cap and a mid cap. The EPS of 16.17 translates into a very expensive price to earnings ratio of 73.08, which is much more expensive when compared with the industry price to earnings ratio of 43.68. The price to book ratio of 2.14 is, however, not wildly expensive. The company has a dividend yield of 0.17%, whereas the promoter holding stands at a figure of 54.26%, which is slightly above average. Also, none of the promoters holding for this company is pledged. The 52-week high for the company is 1314.05, whereas its 52-week low stands at 903. The report we are referring to has a price target of 1306 for this stock, and the total analyst recommendations for this company aggregate to 20 buy, 1 hold, and no sell recommendation. Now, the fourth stock on the list is Music Broadcast Limited, which is available at Rs 58.95 and the face value for it is 2. The symbol for it is RADIOCITY. Now, Music Broadcast Limited, formerly known as Music Broadcast Private Limited, owns and operates the Radio City 91.1 FM, which is a frequency modulation radio brand, and PlanetRadioCity.com, which is a music portal. The company has operations in around 20 cities in India. Now, as is evident from the 1-year chart, this company has not really done much and has been an underperformer, and a lot of wealth of the clients has been lost here. Now, this company has 39 radio and 52 web stations. Analysts believe that recovery in advertising, lower capex requirement, long-term broadcast licensing, better pricing at legacy stations, rising inventory utilization, and improved operating leverage will boost the company's profitability. The market cap of the company is 1630.25 crores, which means that this company is a small cap one. The EPS of 2.23 translates into a price to earnings ratio of 26.43, which is much more expensive when compared with the industry price to earnings ratio of 21.41. The book value of 21.82, however, translates into a price to book ratio of 2.70, which is not wildly expensive. The company has a debt to equity of 0.1409, whereas the return on equity for this company is 0.1024. The company did not pay out any dividends, whereas its promoter holding is a very strong number and stands at 73.65%. Also, none of the promoters' holding is pledged. Total debt on the books of the company is a small amount of 84.99 crores, whereas its 52-week high and low stands at 68.79 and 46.35 respectively. Now the report has assigned a price target of Rs 77, which implies a potential upside of close to 32% from here. There are a total of 10 buy recommendations for this company and only one sell recommendation. Now the final stock on the list is SL Propack Limited, which is available at Rs 130.00 and the face value for it is 2. The symbol for it is ESSELPACK. Now SL Propack Limited is a producer of plastic packaging material in the form of multi-layer collapsible tubes and laminates used primarily for the packaging of toothpaste, personal care, cosmetics, pharmaceuticals, household and industrial products. Now this specialty packaging company manufactures laminated plastic tubes and caters to the FMCG and pharma segments. According to a research report by Systematics Group, its sales in the American region are likely to maintain strong growth momentum due to the addition of new customers and increased business from the existing clients. Moreover, the growth trend in the EU provides further scope for margin improvement. The other trigger is the Blackstone acquisition, which will bring in customers, revenue synergies, accessible to the fund's global network of experts, capital for acquisitions and expansion, and also cost efficiency expertise. Now looking at the 1-year chart, this company is closing the year almost at the same levels that it started it, and there has been no major directional movement. The market cap of the company is 4,098.30 crores, which means that this company is a small cap one. The EPS of 6.11 translates into a price to earnings ratio of 21.28, which is slightly more expensive when compared with the industry price to earnings ratio of 18.73. The book value of 44.19 translates into a slightly expensive price to book ratio of 2.94. The company has a debt to equity of 0.5618, whereas the return on equity for this stock is 0.1459. The dividend yield is 0.96%, whereas the promoter holding for this company is a little above average at 57.03%. Also, none of the promoters' holding is pledged. Total debt on the books of the company is 779.7 crores, whereas its 52-week high and low stands at 138.40 and 84.70 respectively. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, we have provided the link for the source of this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.